Hang Seng is 0.3% higher as well.
18,202 number. And then the low of last Friday, which is 18,055, are levels which should not be violated.
There was a bit of a degrowth, but that's because shipments itself were lower.
The United States will continue to be a very focused area for us.
Revenues were up 6.5%, in line with estimates at 39.28 crore rupees.
The Nifty Bank, though, that's off in style. Adani Enterprises is going to be considering some fundraising. That stock is up close to around 2%.
Definitely, we will continue the momentum which we have seen in our business, not just last quarter.
We're not really much worried. I think the base is very high for the industry.
Caps too are holding, in fact, marching on pretty smartly.
You see the revenues have also scaled up by about 17% as compared to the previous year.
The allegations of the presence of shell companies in Mauritius are false and baseless.
Compared to what the Nifty is doing, which is nothing, absolutely flat, the banks are doing a lot better with about a 0.6% gain. Well, that was the day so far. It's been a day which has been absolutely muted on the Nifty. We'll talk more about that in just a bit. But let me tell you, we are coming to you, as always, from the CNBC-TV18 Motilal studios. I'm Prashant. With me is my colleague Surbi here in the studios. And Nigel is joining us from the newsroom floor. Oh, that's not the newsroom floor. What is that, Surbi?
He is on the red carpet. He's where the action is going to be, where the stars will come glistening down from the galaxies, Nigel.
Well, that's right. I'm coming to you live from the Geo World Convention Center, and we are at IBLA. That's the India Business Leader Awards. I'll tell you what, guys, I'm on the red carpet right now, and later on, in a couple of hours from now, you'll have the biggest and the brightest minds from the industry as well as market men who will be walking down. We'll try to get you a couple of comments as well, all through closing bell. I believe for the time being, though, you guys are safe and sound in the studio, and the markets are trading mildly in the green with the Nifty Bank playing a bit of a cracker.
And I can't tell you guys, I'm so happy to see you two in pink. It's a bright and vibrant screen, and you've got all the hues, all the shades in. I'm the sober one today, I think, in white. Well, which is fine, because the men are really lighting up the screens.
Once we wrap up here and you're going to change, you go into the pink.
But fantastic. We're kicking things off. We're already quite excited, as you can see. The fever and the fervor is only building up. But we've got the last hour of trade left. And Prashant, for that, I mean, it's been an interesting day, right? Because you've got the index flat, but you've got a lot of individual stock reactions and big stocks reacting to earnings.
Oh, they are sort of Asian Paints is just coming through, right? I mean, it came through over the last 15 minutes or so, and numbers are solid. Let's have the stock up. I just want to make a quick mention of it before we move any further. I think there is about a 15, 16. It's a big one, right? Volume growth is coming, I think, at 15, 16%. And the expectation was for 10, 12% in that range. Numbers look very good at an operating level. Now, for the broader market, I was making this point over the last couple of days that there is a bit of an intermarket divergence developing between the Nifty and the Bank Nifty, meaning that the Nifty basically had taken out last Thursday's high, the recent intermediate high, whereas the Bank Nifty had not done that. Today, the Nifty is absolutely flat. The Bank Nifty on an intraday basis has taken out last Thursday's high, which was 43,740, and then it has sold off a little bit. We're back at about 43,550 or so. But intraday, that level got taken out. So that's something to kind of watch out for. Banks are still very much, I think, the center of attention. You look at the four names, ICICI, HDFC Bank and Axis Bank. The last I checked, they were adding about 30 index points to the Nifty. On the other side, you've got Dr. Reddy's and L&T, which is deducting 42 index points out of the Nifty. So these are two parts of the market. Reliance, of course, is also participating, and ITC is participating on the upside as well. Out there on your screen, Lever and a few other names, all there in the mix. But financials has been the mover both on the upside and downside all of this week, actually all of the last 2 weeks or so, and it is not any different. Later, I mean, in European session, we get the decision from the Bank of England, and we get more global data in terms of, I think, producer price index numbers, initial jobless claims, and of course on Saturday there is the final Karnataka election results, exit polls notwithstanding. I mean, that's the real deal, which the markets will wait and watch out for. So it's a bit of a range-bound kind of a day with not very much which has happened in the Nifty all day through. Surabhi.
Well, that's the large cap picture. Mid caps have not been bad, you'd have to say. The advanced decline ratio is still very, very positive. We've got over 1,700 stocks on the way up, just about 1100 on the way down, and a lot of individual movers and shakers. So railways is a theme, I mean, that continues. So your RVNL, your IRCONs, IRFCs of the world, they're having yet another good session. That's the mid-cap index up for you. Those are some of the railway stocks that are doing really well. In addition, probably should highlight something like a Gujarat Gas, on which the market has taken a pretty favorable view after the numbers. There's a 5.5% pop. And then you have more names, whether it's a TCI or a Team Lease or a Newland. So there's a fair amount of action beneath the surface on the mid-cap screen. So not too bad, really. Let's then tell you what's lined up on the show today. It's going to be a lot of earnings talk and, of course, all the news-specific action. Asian Paints has just reported Q4 numbers, and it's a good beat on the net profit and EBITDA level. The company also saw a double-digit volume growth ahead of estimates. Naveen Kulkarni of Axis Securities will join in for a quick take on those numbers in a bit. L&T has slumped, and that's been the story right from the morning. The market extremely disappointed with the miss in margins and the rather muted guidance, again, on the margins. We'll get you the key highlights from our conversation with Mr. Shankar Raman, whole-time director and CFO of the company, in the next half hour or so. Ronak Onkar of PPFAS Mutual Fund is going to be joining in with some top portfolio calls. So lots of action over the next 1 hour.
All right, well, that's the lineup here. How should you position yourself in the last hour of trade? That's the question we're asking. As always, Mitesh is with us to help us with that. Mitesh, hi. I mean, banks are doing a bulk of the heavy lifting today, looking good. The Nifties have been absolutely flat all through. What are you doing?
Yeah. Prashant, I think, we had been calling for some kind of consolidation on the index. I think that still plays out. Though I think the good thing is that we are not falling off much from the upper end of the range. So I think in that sense, you have to be nimble-footed if we see an hourly close about 18,350, 360 zone. But as of now, it still looks like that, we'll possibly be into consolidation, and the range which I was hoping that it will be about 18,050 to about 18,350. I think the lower end could be slightly on the, it can be now moved up to about 18,150 to about 18,350. So basically, still looking at consolidation. On the stock side, though, the breadth is impressive and a lot of stocks are participating. So we have been trading with more of buy calls. And right now, also, I have a buy on NTPC. That's a buy with the stop at 177, look for targets of 186 over here. And the other one is Ultratech Cement, and cement stocks have done very well in the last few days. We've had buys there earlier as well. Ultratech now can be bought afresh with the stop below 77.90 for targets of around 79.90 to about 8,000.
Okay, so those are some of the calls that Mitesh was going with. Mitesh, thanks for that. We'll come back to you in about half an hour and get another set of calls going. Let's just go back to the Asian Paints number. The profit came in above estimates, 1258 crores. Our poll was closer to about 1120 odd. The margin came in at 21.2% versus our poll of 19.4. So that was a handsome beat. And the volume growth looked pretty solid as well for the decorative paints business. I think we've got Naveen Kulkarni now joining in. Naveen is from Axis Securities. Naveen, always good to have you on the show. Thanks for joining in. So what are your thoughts? I mean, first glance, this looks like a beat on most counts. So what's your reaction?
Yeah, clearly the numbers are a significant beat on most counts. So volume growth of 16% is at least 5% ahead of what we were estimating. EBITDA margin, again, is a significant beat. So we were expecting around 1,740 crores. So they have reported around 1,850 crores plus. So that's, again, a significant beat. And profit numbers are also beat by almost by around 8 to 9%. So all around, very good set of numbers from Asian Paints.
All right. Hi, Naveen. What else will you be looking at in terms of a fine print? And do you think your current estimates, they factor in this sort of a beat? Or do you think there's a potential that you'll have to revise your estimates upwards? I'll tell you what, the PE is not in control, but the E at least is something that you guys estimate.
Yeah, so it's very likely that our estimates will go up, primarily because I see that what's happening is that the gross margin, I think, is ahead of what we were estimating, right? So we were expecting EBITDA margins to be in the range of around 19.5%, and the EBITDA margin is 21%, right? So there's a beat of almost 150 basis points on EBITDA margin itself. Most of this beat would have come from the gross margin expansion. Going ahead also, we believe that gross margins are likely to sustain at these levels. So we are likely to raise our estimates. We'll see after the conference call, but most likely, we'll see a 4 to 5% upgrade in our estimates for, let's say, FY24. That's something which seems a little likely at this point in time.
After two sets of earnings where we saw downgrades, maybe Asian Paints will see lead to some upgrades. Top line, though, Naveen, it's compared to the meaningful beat at the operating level. Top line with 11% growth is in line, right?
Yeah, so top line is not significantly ahead of estimates. So top line is probably in line with consensus, probably a percentage point ahead than what we were expecting. But yeah, clearly the beat is on the EBITDA margins as well as on the earnings.
So, Naveen, also what's interesting is market positioning, right? Asian Paints is not one stock that has had a great run. I mean, it's been very range-bound last 1 year. The last 2-3 weeks are better, where we started seeing a bit of a build-up and it climbed above 3,000. What is your target price? And you are potentially looking at upgrades to earnings estimates, and I'm guessing the TP as well.
Yeah, so target price will be in the range of around 3,400 at this point in time. We will see how let's say after the earnings commentary and probably if we see significant upgrade in earnings, probably there could be some bit of upgrade in the target price also. Yeah, you are right that the stock has been range bound for a while. Two reasons, of course. One is probably the competitive intensity will increase in the future. Second, of course, has been the raw material charges. I think the second aspect is very likely to come under control this year. Competitive intensity is likely to go up in the medium to long term. That, I think, is still going to be a challenge. So multiples may not increase, but earnings upgrade are still a possibility.
Okay, all right. We'll leave it there. Thanks very much, Naveen. Lots of new players in the paints business, and that's a highly profitable one, so why not? We'll see how the space pans out. Stocks spiked up even as compared to where it was when we started 15 minutes back. Deven Chokshi is with us with some thoughts. Deven, hi. Good afternoon. Straight away on Asian Paints, any thoughts? We've heard from Naveen, some earnings upgrades expected. And then your thoughts on the other big one, which is Larsen.
Yeah, Prashant, good afternoon. Well, Asian Paints certainly, I think, as expected, has come up with a slightly better number because I think we were expecting the advantage of the lower raw material prices to come to them. And I think that is adequately getting reflected into the margins. Though I think one would possibly argue that I think these margins are even better than what was expected. But that's okay because I think in a situation like this, when I think the prices of raw material falls, and on the other side, the demand scenario remains upbeat with higher amount of, I think, offtake on the volume side. Obvious it is that I think they are getting advantage of lower prices on the raw material side and higher demand generating better sales for them. So it's a double advantage which they have got in this particular quarter. Whether this particular margin sustains, I would think so, because I think because of the crude oil prices, all the derivative products of crude oil, which is the for paint industry, I think they are also more or less under control. And as a result of which, with the demand continuing and the volume remaining on a higher side, I would like to believe that I think the company would be in a position to sustain a decent growth going forward in the current financial year. Larsen, of course, I think is a disappointment, but not so. I think that is not as expected. We have been making communication on this particular aspect that Larsen's recent order wins have come largely from the sectors like railways, including from water management systems, and that is where probably the margins are really very tight. As a result of which, I think what we are likely to see in coming quarters also, the delivery of the execution of the orders, but at the same time, I think with a tighter margin. In my viewpoint, I think one will have to accept the reality that this kind of companies, probably when the expansion is going on in the economy and the infrastructure side, will certainly get higher amount of order inflows. But at the same time, I think they'll have to be extremely competitive and the margins would probably remain under check for them. So yes, I think some amount of derating might happen, or maybe the stock price appreciation might come in some kind of a question, at least for near quarters.
Okay, that's L&T. Challenging quarter and the market is in no mood to relent. 5% down on the stock. We did catch up, of course, with the company's management. Had a detailed conversation with Mr. Shankar Raman, who's the CFO, as well as the whole-time director of the company. And we asked him, kind of diving straight in, Why are the margins not picking up? Listen into the commentary.
Project business margin profile would be around 9%, 9 to 9.5%, depending on the type of projects that we receive and the economics that play out. The manufacturing businesses would be all in mid-teens, and the services business would be around 19-20%. That's the mix. 1/3 of our revenues come from services today, and 2/3 come from manufacturing and projects. And hopefully our thrust on services, if they continue and they continue to be as profitable, that also contributes to the overall margin. So my sense is that blended margins would be anywhere between 9 and 10% in a normal situation. Exit businesses which are asset heavy and back-ended in returns, so they will eliminate the losses that are today featuring in our profit and loss account. 2, they will release cash to be able to ensure that we manage our working capital well. 3, the efficiency with which we have managed our working capital, if you continue through the plan period, we are likely to have a lot of cash generated in this period. And we do not have large investment plans that we have. Any inorganic acquisition is mostly in the technology space of IT, technology services, etc. And those are separate listed subsidiaries which will have their own acquisition plans. So as far as L&T is concerned, it looks to the next 3 years as a fairly good period to gather a large pool of cash. We are absolutely on spot as far as Lakshya is concerned. We just completed 2 years and 3 more years to go before the plan plays out. The measure of value creation that we have given Lakshya 26 is ROE. We started FY21 with 9% ROE. We wanted to end 26 with 18% ROE. And we are at about 12.2% as we close 23. And we hope to get to around 14% or thereabouts by the time we close 24.
All right, that was a commentary from L&T. Need to take a quick break on that note. On the other side, we'll come back and get chatting with Ronak Onkar of PPFAS Mutual Fund, get down to some of their interesting themes and how they're looking at the portfolio.
Welcome back. You're tuned in to Closing Bell, and as we speak, well, the Nifty is virtually unmoved, but there are plenty of stocks that are moving around out there, and from the pharma space in particular. You have Divi's and Laurus Labs. Well, both of them are under some pressure, while on the flip side, Newland Laboratories is flying away. Let's get in Ekta to give us a quick analysis on all those pharma names. Ekta, take it away.
Thanks for that. Well, yes, I'll start with Dr. Reddy's, which has actually been supported by a whole host of different numbers this time round. So, for example, the PLI scheme came in at around revenues of 30.5 crores, the divestment of brands to Eris Life Sciences, 264 crores, Revlimid generic contribution in the US. But what the street didn't like and was disappointed is that the US sales slowed slower than estimates. It came in at around $310 million versus estimates of $340 million. India reported strong growth of around 32%, but it was aided by the divestment adjusted basis, which was up 5%, and adjusted margins, according to ANTI, came in at around 21% versus expectations of 23%. Now, Divi's and Laurus, you did mention that there is that buzz of monthly export data which these stocks have been reacting to, but analysts are now questioning the monthly export data accuracy. For example, it doesn't include SEZ data, plus it is year-end, so the stocks have recovered from the day's low. Q4 numbers due from the likes of Cipla, Aurobindo, as well as Divi's Labs. So all of these stocks would be in focus. Lastly, I just want to end with Newland Labs, which is in focus because the revenue was up around 59% on a year-on-year basis. Strong performance coming in for Newland. EBITDA around 120 odd crores, margins 29%. In fact, the highest ever margins and EBITDA by Newland Labs, and profit of around 84.5 crores. One of the reasons, according to analysts, is probably it was a one-off opportunity in the CDMO business, which really probably aided the numbers this quarter. But we will wait by and see what the management has to say this evening in their conference call to get more details on that. But nonetheless, strong performance coming in.
Okay, all right. Thanks a lot for that, Ekta. Well, Deven is still with us. Deven, what do you make of these numbers? Both Divi's and Laurus, the street is a little bit nervous post that monthly update, while Newland Laboratories, the stock is flying away. What's your pick from the pharma sector?
I'm particularly, I think, comfortable with what Divi's and Laura's commentary is. I think would like to believe that with the expanded capacity coming into the fold, and at the same time, I think with the raw material prices remaining under control, the advantage of volume-led growth as well as I think the margin protection is going to be seen and it's going to be felt in the performance going forward in coming quarters. So from that perspective, I like particularly Divi's and Laura's, both these companies, investment point of view, because you already have a visibility of the execution under the contract research business, I think that they are executing. And the API business, I think, which is giving us the visibility on the order front as well. So from that perspective, these companies remain reasonably good to add into the portfolio. At least I think the downside remains protected. Maybe I think compared to other peers in the frontline pharma companies, they may end up, I think, producing at least 2x more return compared to the other ones.
You own any of these tire names, tire makers, Devin? CA, JK, Apollo, etc.?
No, Prashant. I think though the story remains convincing now because of higher demand scenario continuing for the commercial vehicle segment in particular, which we like, and also because of the margin remaining under good amount of comfort level now compared to what they were before because of the higher input cost. I guess I think from that perspective, at least in the coming quarters, the situation looks reasonably good for the tire companies and particularly for commercial vehicles, where I think the margins are likely to be better and the volumes are likely to be higher. But sorry, we don't own these companies because I think we don't like too much of fluctuation into their earnings on a quarter-over-quarter basis.
Okay, so that's a call on some of the tire stocks. Asian Paints, by the way, in a leadership position now, 3% higher. Actually, even Lever, it's taking its other peer along with it. Reddy's, of course, is still down 7% and counting. That's a sharp cut that has come through on Dr. Reddy's. Devin, hi, good afternoon. Surabhi here. Just thought that, we'll check this with you. Of course, Reddy's has been a big disappointment as far as the pharma earnings go. But your thoughts on the new kid on the block, Mankind? I mean, yesterday was all about this big listing. This morning, there were some reports suggesting that there's some issue with IT searches, etc. Stock has recovered. But any thoughts? A lot of people saying that because Mankind is a pure India story, perhaps, it could be an interesting one to look at.
Yes, Surabhi, good afternoon. Well, we have not looked at this company in very detail, but I think since the IPO came in, I think we actually entered into the subject to analyze further. Yes, it is a pure India story, which is looking at least, I think, stable comparatively. And I think the visibility on the volume front, growth front, I think is also being seen in both verticals. So from that perspective, I think one could possibly argue, yes, the situation is likely to remain more steadier than others comparatively. However, not too sure about the valuation at current level, whether the valuation are adequately pricing in at this point of time, not completely sure. And since we don't have the full coverage on this company, would refrain from putting valuation remarks at this point of time.
Devin, we'll leave it there. Thank you very much for your time. Good speaking with you and appreciate it very much. Now, MSCI index rebalancing will be announced tomorrow morning. Let's revisit what the potential changes in term could be. I mean, expectations are higher on a few specific names. Nimesh has got that list. Nimesh.
Hi, Prashant. As I rightly pointed out, the changes will be announced tomorrow morning and will be effective from 31st of May. Now, in terms of headline number, the big number is India is going to see an inflow of close to $1.3 billion because of the changes in the MSCI. Now, a large chunk of this inflow is going to be because of Kotak Mahindra Bank. MSCI is expected to increase the weight on Kotak Mahindra Bank, which will lead to an inflow of close to $750 million. The ballpark number is between $750 to $800 million. So that's Kotak Mahindra Bank is going to be a big stock to watch. As far as the MSCI changes is concerned, which will get announced tomorrow morning. So that's one big stock to watch. Other important changes which are expected to be included to the MSCI, that includes names like Hindustan Aeronautics. In there, Morgan Stanley expects an inflow of close to $175 million. The other big stock to track would be Max Healthcare. If that gets included, that stock is going to see an inflow of close to $256 million. So that's a big amount that's likely to come in Max Healthcare. There are a couple of stocks which are not on high probability, but can get added to the MSCI standard index. It could be a migration as well. That is Cummins India and Ashok Leyland. In Ashok Leyland, there is an expectation of an inflow of close to $150 million. So these are the few important inclusions. There is going to be some weight increase as well. I spoke about Kotak Mahindra Bank. That's going to be the big stock to watch. Apart from that, Interglobe Aviation is one stock where there could be a further weight increase, which could lead to an inflow of close to $28 million. And there is Samudra Motherson Sumi, where there could be an inflow of close to $18 million. The two Adani Group stocks where there's going to be a weight decrease, which is Adani Transmission, that can lead to an outflow of $125 million. And Adani Total Gas can see an outflow of close to $80 million. So these are the few changes, but the headline number is $1.3 billion of inflows, and the biggest chunk will go to Kotak Mahindra Bank. So Kotak Mahindra Bank could be the stock to watch, and it can be a binary event. If the weight increases, expect $700 or $800 million of buying in Kotak Bank itself.
Indeed, Nimesh, it could be a binary event, and we have seen how some of these events play out. So that's the big cue. We'll keep an eye out on that. Thanks so much for joining in. But as promised, let's welcome Ronak Onkar, co-fund manager at PPFA's mutual fund. Well, Ronak, thanks so much for coming down today. And, it's going to be a big event, so I hope you're going to be staying a little bit longer after this as well. Let's talk markets first up. What are the cash levels you're sitting on as of now? We've had a big rally. Are you all fully deployed, or are you all still sitting on some cash? And particularly with regard to your global exposure, I was just looking at a couple of data points. I think you'll have lightened your positioning on Suzuki and added some positions on Alphabet as well as Amazon. Tell us more.
Sure. So, Nigel, thanks for having me here. It's good to be here in a live environment. Otherwise, we talk on the screen every time.
Yeah, indeed.
So, yeah, with the cash positions, the FlexiCap fund is about 17% of cash right now. But we have been on cash for a while now because the valuations in domestic market have not eased, as we know. And since we are not allowed to deploy additional funds in international, although we are allowed to reshuffle between the existing positions, we have decided to trim the position of Suzuki Motor Corp, the parent company, and we bought the domestic subsidiary Maruti Suzuki.
Oh, okay. All right. Ronak, before we go on, I was just looking at another data point. I believe it's 10 years since your FlexiCap fund was first launched. Yes. So congratulations on that front. But a bigger congratulations because you'll have given good CAGR returns over the last few years. And just to tell our viewers out there, this FlexiCap fund started with an AUM of around 150 crores. I believe it's closer to around 30,000 crores. So good on that. Congratulations.
Thank you.
But, we were just talking about the pharma stocks. And in your rejig from your domestic, from the India-facing stocks, Sun Pharma is a stock, I think, that you all have exited most of your holding.
Yes.
Could you tell us if you all have taken a position in another pharma stock, or you'll have just cleaned out from the pharma space?
So people who track PPFA schemes for a while, they know that the pharma positions in our portfolio have been a smaller position, usually around 1% of each of the companies. And the reason is we are having a difficult time to identify which one company might do really well. Because of the FDA issues, the market shrinking in many categories, the verticals which they operate in may not grow as well, or even at the same time pricing power may not be there in some of the older categories. So many of these companies do face these competitive challenges. So we have always found it difficult to pinpoint on one company. So we built a basket of pharma companies who were troubled at that time while we invested. So Sun Pharma, particularly at that time when we invested, it had the FDA issues plaguing it, and the stock had bombed at a point, and we built a position over a period of time. We held on to many of these stocks because we tracked the numbers, we tracked the results over a few years, and we saw that it's very, very competitive market and it's not growing. At a scale, you can only grow at a certain level. So Sun Pharma, I think there are better opportunities available. We may go into other pharma names, but so far we've just sold one, and it's like a basket. So the basket keeps getting reshuffled. So in the past we have reshuffled from Lupin to Cipla. So we might look at other pharma names in the future.
Ronak, I keep a close eye on, what you're moving around. I try at least. But, a couple of stocks that I remember that you'll got in when most of the market was shunning them, which on a valuation parameter were looking good. ITC, if I'm not mistaken, and Coal India.
Yes.
I think you'll have lightened the position on Coal India.
Yeah.
What about ITC? If you could tell us what's the reasoning out there? Are you looking to, completely exit Coal India? It's made the money, it's had its run, and now it could run into some headwinds?
So there are two different kinds of businesses, ITC versus Coal India. Coal India is more of a commodity play where it's a mining giant, whereas ITC is a earnings compounding kind of a business. So it has several businesses which generate profit and they continue to grow. So with ITC, we may have a longer term point of view as long as the valuations remain comfortable. With Coal India, it remains to be seen when the valuations will be difficult to hold on for. But Coal India has been a good entry point for us. At least after the COVID, we realized that the power demand in the country has been growing, and thermal power has been a larger component of that power demand. So I think Coal India has a bit of a future, assuming they continue to mine and grow their production volumes as well.
All right, very different businesses, but Ronak, the reason I asked you about both of them was they were those anti-ESG plays, right, at one point of time. Suddenly that discount completely went away and both these two stocks did quite well. But I'll tell you what, my co-anchors, they don't want to miss out, so they want to ask you a couple of questions. Guys.
All right, Nigel, thanks for that. Ronak, I just a bit of a here and now kind of a question. I don't know if you saw the April equity inflows into equity funds, the numbers which came through. It's a very sharp fall. Number is about 5,500 crores. Previous month, it was some 20,000 crores. This is April versus March. Any thoughts? What explains it? One logic is that people allocated a lot of, sort of brought forward a lot of investments and put money into debt, real estate to lock in before tax changes kicked in starting April. So then April became a little light. Is that the most likely explanation, or is it something else?
That seems like the likeliest explanation right now. But if you see, Prashant, the stocks have also moved quite quickly in the period of past 2.5-3 years. So I think most asset allocations would have been skewed very higher towards equity. And it's natural that people would want to rebalance their portfolios to build a debt portion as well over a period of time.
Okay, got that. Ronak, hi, and good to see you on the red carpet along with Nigel. And hopefully, yeah, we'll see more of you through the evening as well. Let me ask you this. I know that a lot of your holdings are more from, whether it's IT or a lot of the financials. But I think the big debate today has been on capital goods, considering what L&T has delivered or rather not delivered. Just your thoughts on this entire side of the market, whether you are looking to deploy more money here. And if so, what kind of companies would you go for? Because what L&T is kind of revealing is that profitability and margins are not easy to come by, even in such an upcycle like the one that we're in.
Sure, Surabhi. So I think capital goods is a very tough sector to be in. Unless you have scale or you have some capability which other companies don't have, it's very hard to demand any pricing power. At the same time, you have government contracts and a mix of private capex not picking up so far. So I think all these factors playing in, it's a very hard business to be in. We do track capital goods because we generally track the entire market, and our investment universe does have a few capital goods companies. But we have so far not ventured into buying them because, number one, valuations have picked up much earlier than the results have actually shown up. So I think it remains to be seen in the future if it's a great sector to track. But I think it's a mix of good companies and a very competitive environment to begin with.
All right, Ronak, the bigger debate I think is on IT. Should you be getting in or should you be getting out? One part of the street is saying it's already corrected a goodish bit, 30, 40, 20, 30, 40% from the top. The other part is saying that it should not have gone up so high. But I was looking at the way you all have rejigged, and I think this most sizable addition in the last couple of months on the position you had was on Infosys. Yeah. So you all are buying into this bad news, so-called bad news or nervous period for the stock. Tell us more about your view on the tech space as well as Infosys.
So it remains to be seen if it's a good call. We'll wait for the long term to play, the stock to play out. Yeah. But in IT field, if you see, these companies have been through various cycles so far. So what people talk about supply side cycles where employees are hard to find, and on some time it is the demand side cycle when the economy or the customers are facing troubles and they are unable to spend on the IT spending. So these two things have played out several times in the past, and most of the IT companies have scaled and become large giants today on the back of several cycles of technology change as well. So I think these companies have the capability of running these business models. They have the reach, they have the marketing chops, the sales chops to scale these companies. At the same time, the delivery engine is perfected. So India still remains to be the low-cost employer for IT services. And as long as the arbitrage is strong, it's sizable, India will have the advantage of scaling that particular sector.
Well, and time will tell whether or not this call works. But for the time being, you'll have definitely gone ahead and added a big chunk, if I compare the last couple of months. Ronak, final question before we let you go. You were telling us that you've exited the international position on Suzuki. I think you've got into Maruti. Yeah. What's your view on the auto space? I think from the two-wheelers, Hero MotoCorp as well as something that you got into. Tell us more.
So we have Hero MotoCorp and Bajaj Holdings, Bajaj Holdings. But in the auto space, we have been a little early in the two-wheeler space and not played out that well for us because two-wheeler space has faced a lot of challenges in terms of volume growth. Whereas on the four-wheeler side, there's actually a lot of growth. And despite Maruti losing some market share to the other competitors, it's still a decent player with the largest market share as a single company. And with the portfolio, which is now about to match some of the other players as well. So again, remains to be seen how they perform in the volume game going ahead. But I think four-wheeler space is a little better placed right now, and we have trimmed down even Hero MotoCorp because of that.
All right, it's always a pleasure talking to you, Ronak. Thanks so much for coming down, and hoping forward, to see you later this evening. As Surabhi said, we're looking forward to catching up with you. Well, guys, I'll toss it back to you all in the studio. But maybe after a commercial break, I'll get you all a sneak peek into what's going on inside the big event.
Okay, the market may be flat, not doing very much. The Nifty is down about 22, 23 points. Banks are doing a little better, but there is always chatter, isn't there, Nimish? Afternoon.
Afternoon, Prashant. So, it's a difficult day, even from a charter point of view, because nothing is happening much. Even the flows are quite muted. We've been seeing a range-bound market for the last many days, but there was a lot of action and there was buying as well. That seems to be absent in today's trade. That's the overall feedback. The sector which really outperforms is the Nifty bank, and again, that's largely backed by FI buying. So the buying continues in private bank stocks from the large institutions. That's the overall feedback. In terms of sectors, there are two divergent moves today. One is the pharma sector, which is largely under pressure on back of weak numbers from Dr. Reddy's, and some, there was some chatter about weak export data as well. That's put a lot of pressure in the other pharma names as well. On the other side, there is a bit of buying interest back in the cement names, largely on back of hope that there could be some price X as well. So that's been a big talking point within the big outperformance in the cement names in today's trade. But broadly, a range-bound trade, but even the participation is on the lower side, both from larger FIs as well as from retail investors.
Okay, got that. What about individual names? Anything interesting catching the eye, Nimesh?
Well, so in terms of individual names, the first stock on my list today is Indian Hotels. After a big move in that stock in the last many days, some bit of profit booking now in today's trade. So there are sell flows, and there is a bit of profit booking as well. But all eyes will be on the analyst meet today evening, and that's going to be very important. So Indian Hotels is the first stock. The second stock is Sona BLW and Max Healthcare. I spoke about Max Healthcare as a potential inclusion into the MSCI, but Sonacom could be a dark horse, and that is what a lot of dealers are expecting, that could be added. If that stock gets added to the MSCI, you could see a buying of close to 1,000 crores in Sona BLW, and hence that stock could be in focus. The third stock is Greaves Cotton. For the last couple of days, good volumes on that stock and a bit of accumulation as well. I believe some large HNIs and some family offices have turned quite active in Greaves Cotton of late. Remember, the results are tomorrow, so that's something to track in Greaves Cotton. And the last stock is GMDC. While we keep talking about all the Gujarat-based stocks doing good, GMDC today stands out largely on back of buy flows. So some bit of interest is back in GMDC as well. Of course, it's a overall Gujarat play, but I guess there is specifically some buying interest back in GMDC as well.
Okay. Nimish, thank you very much for that. I'm looking at Sona BLW. What a move it has had in the last 1 month or so. 10th of April, stock was at about, I think, 420 in the last 1 month. It's basically moved up 120, 130 odd rupees. So it's been a steep upward move that we've seen. Nimish, you want to make a point? I was just wondering whether some of this is in the price. Go on. Yeah.
No. Just to add to a point, Prashant, on Sona BLW, that the price of 420 that you were referring to, that was exactly the point where there was a large block and the private equity investors sold out completely. And I believe that's the reason why there is an anticipation that maybe because the free float has gone up, it could get added to the MSCI, and hence you've seen a bit of clean out trade as well, and after that a bit of outperformance and expectation as well that maybe Sona will get added to the MSCI tomorrow, and hence you're seeing a bit of uptake before the MSCI announcement.
Okay, all right. Tomorrow morning we'll have that list and we'll get you that. Nimesh, thank you very much for that. Well, for now, things are absolutely subdued. Mitesh is with us with quick BTST trades. What to buy or sell today for a reverse trade tomorrow, Mitesh? Mitesh, you'll have to unmute yourself. Can't hear you. I think we'll just fix that and come back to you in just a bit. All right, why don't we take that opportunity to look at earnings, right? I mean, the earnings which are in front of us, the key ones that we will be tracking. So the earnings calendar is on your screen. Siemens, Eicher, Dr. Lal Path Labs will report numbers today. And we've got tomorrow Cipla, Colgate, HAL, IGL, Tata Motors and Vedanta, which will be reporting. Ekta is standing by with expectations from a few of these. Ekta, what do you have?
Well, I will be looking at Cipla as well as Siemens in terms of what they would probably be reporting this time round. So in terms of Siemens, the revenue growth is expected to be around 11% on a year-on-year basis this time. And we are expected to see some amount of, improvement in terms of the EBITDA as well. So the EBITDA is expected to come in at around 530 odd crores with a growth of around 13 odd percent. Margins are expected to come in at around 12% and a profit of around 410 odd crores. Growth is expected to be fueled by the energy, mobility and digital industries vertical. There will be a healthy order book expected. Macquarie is baking around 26,000 odd crores in terms of mobility order inflow, and they expect the core order inflow to be around 5,000 odd crores as well. Now, in terms of Siemens, it's interesting because UBS published a note 1 day prior to its results. They've maintained a buy and they've raised the target price to 4,500 versus 3,900 for Siemens. So that's the expectation with regards to Siemens. We also have Cipla, which will be releasing its numbers tomorrow. And that one is expected to report a revenue growth of around 8 odd percent, margins of 21%, profit of 773 odd crores. US sales are expected to remain steady because of the contribution of Revlimid generic. Estimates are the US sales could be around $185 million to anywhere between over $200 million as well. This compares to $195 million in the previous quarter. Albuterol, which is an inhaler drug, the market share is expected to have reduced, so not expected to contribute as much. Domestic sales, the range is wide, anywhere between 6 to 7% to even 11 odd percent. They could benefit from cough and cold medicines, and they have a huge pediatric portfolio as well. Margin range is 21 to 23%, so they're expecting an improvement year on year and maybe some amount of a slip on a Q-on-Q basis. Commentary with regards to remediation on the Goa and Pithampur facility as well as Advair generic would be something that the street would watch.
All right, got that. So Cipla as well as Siemens, some of the big ones that are in focus now. Thanks very much, Ekta, for getting us a heads up on those numbers. But for the time being, let's head back to Nigel, where the action is heating up. Nigel, tell us what else is going on around you.
Well, Surabhi, before we went in the break, I told you all that I'll get you a sneak preview. And as you always say, I'm a man of my word. So let's get straight to it. Let's get straight inside and give you a little bit of a sneak peek into what's going on in there. Join me. This is where, in fact, things are being set up. That's the lounge. That's the VIP lounge where we'll be having all the who's who, market men. You'll be having the top specialists as well who'll be joining in. So you don't want to miss that. But let's go to center stage. Sonia Shenoy as well as Shruti Mishra, well, they're going to be the host of this evening. That's the control room as well, guys, for y'all. So just to give you where the orders come from, how things shape up, that's where it is. And in fact, as I said, we have Sonia Shenoy out there and Shruti Mishra. They'll be hosting the show later this evening. But hey, we've got Mangalam as well as Ritu out here. So let's get a word from them. Guys.
Oh, hi, Nigel.
Ain't you all excited about this evening?
Extremely excited. Don't we look excited to you?
You always look excited.
I thought we were hosting the red carpet. What's happening here?
He's hosting a pink carpet.
What's going on? You were anchoring closing bell from here.
Yeah, but we said let's come in there. Let's get a sneak peek into what's going on. And what about you guys? I believe y'all are going to be chatting up with the who's who later today. Who are you most interested, Mangalam, to talk to? I've been looking at your monitor and no prizes for guessing.
I am most excited to speak to, and I'll be very honest, Harmanpreet Kaur and Smriti Mandana. That's a safe answer. That's a great answer. Cricket, I love. And women in cricket, even better, Mumbai versus RCB.
All right, and what about you, Ritu?
Well, Azim Premji, for one, we've admired him for all these years, and I don't think we've ever met him in person before, so I'm most looking forward to that.
Our colleague Yash, though, he's going to be, I think, if sources tell me, I think Yash, I believe. Yash, who are you looking forward to meeting this evening?
I was just hoping that you don't take this turn, but now that you have, what do you want to know?
So tell me, who are you looking forward to meeting this evening?
Well, I'm looking forward to meet and hopefully interview Alia Bhatt. She's also going to be here. She's the entertainer of the year, and we've sort of admired her films. So many of them, so many different characters. I mean, just wanting to talk to her and understand a few things, what she thinks about.
Mangalam, I think I'll have to cut it out there. Because
just a word. Because
I haven't seen someone talk with a straight face and lie through their teeth. But anyways...
I'll tell you one thing. He might want to speak to Alia Bhatt, but there's Nikhat Zareen coming. She's a boxer. So you got to be.
I'm just going to keep my distance there.
And what else?
Nigel, you've been asking us all these questions.
What about
Tell
you?
me. Yeah, who are you looking forward to meeting? And don't say TV Narendran.
No, and every day I look forward to meeting Sonia Shenoy, and she's up there on the screen, and so that's someone I think everyone's actually always looking forward to looking. And even my friend Shruti Mishra, they are out there, they are practicing for later this evening, so it's going to be one hell of an event. And, in the next couple of hours, we're going to be going live as well. But, guys, what else? It's going to be a pleasant evening. Remember, work's there tomorrow, Mangalam. So I don't want you to call in sick early morning.
There's no way I'm calling in sick early morning. Chances are maybe early part of the night I'll call in sick and go home, perhaps for work tomorrow.
Ritu, what about you?
It's curtains down at 8 p.m. So we're all good night, goodbye.
And you're heading back to Bangalore?
That's tomorrow morning, yes.
All right.
I think it's directly from the venue.
I think
everyone's received the invite for the after party because Nigel's the one who's been sending that invite to everyone.
Guys, I think I'll toss it back to the studio because Yash could go on. I think we have given you all a sneak peek into what's going to be happening later this evening. And Surabhi and Prashant, we're looking forward to having you all here as well. So make sure you wrap up the show and see you all in a bit.
Keep it tight. Keep everybody together. I think the nerves are flying. The excitement is getting really high. We can feel the heat right till here. We really can, Nigel.
Absolutely.
Okay. All right, guys. Catch you all in a bit. But for the time being, we still have 10 minutes of market action to go. Market's absolutely flat, just 20 points lower. We will take that break and come back and have our final conversation. Amrish Paliga joining in just a moment.
Okay, welcome back. There's 7 minutes to go for close. Amrish Paliga is with us with what he's making of things. Amrish, good to have you with us here. Would you buy any of these two big losers from today, DRL or L&T, or would you give it a pass?
L&T I would surely buy. In fact, I'm looking at levels of about 2150, 2200 to buy L&T. Clearly looking at the next at least 4 to 6 quarters where we should have extremely good numbers, and looking at a price of about 2800, 2850 for it.
Okay, so you're willing to be the buyer on this dip on L&T. That's interesting. Amrish, let's talk about the other big reaction. That's Asian Paints. That's a blowout volume performance, right? 16%, margins moving higher. But do you think it can sustain? What's your take?
It should sustain, and this is what I've been saying for a while, that JSW and the Birla Group foray into paints clearly will only be affecting the people at the lower end. Like Asian Paints actually has a huge moat, and it's not possible to replicate the hold they have on the distribution channels. And now looking at the way the oil prices are going, the input costs are coming down, I think the margins should improve for Asian Paints even going ahead. And I'll not be surprised if we see levels of about 3,800, 3,900 in about 8 to 9 months.
You like Dabur, Amrish?
Yeah, Prashant, Dabur is one of our picks now. Again, a contra bet. Again, it's one of the best names in healthcare, home and personal care, as well as food and beverages. They have a distribution network of about 77 lakh retail outlets, out of which about 50% of the sales comes to rural regions, since they have a presence of about in about 1 lakh villages. It's targeting to double its food and beverages category to about 4,000 crores in the next 5 years through extension of the existing brands as well as the recently acquired Badshah brand. And healthcare as well as personal care is expected to grow at about low double digits. Currently, it's in single digits in the last 2-3 quarters. So Q4 was anyway muted, and that's one of the reasons why the stock has corrected. And there was also a one-off forex impact due to Sri Lanka. And if you look at the healthcare segment, that was affected due to the high base effect. We had high base effect because of COVID in the last 1.5 years. So that's what has affected that. Whereas if you look at the personal care and the food and beverage segment, that saw extremely good growth. And we continue to see new product launches, whereas in the last quarter, they cut down about 180 SKUs, which are not doing well, so that only the profitable ones stay. If you look at e-commerce, that's grown at about 34% in the last quarter, contributes about 9% to the top line. And with the softening of the commodity prices, I'm expecting an improvement of margins to about 19 to 20% over the next 3 to 4 quarters. And we are seeing green shoots in the rural markets, and the management expects that to drive the revenues going ahead. So expecting an EPS of about 13 for FY25, and I have a target of about 650, which is a good 25% return from here.
Okay, got that. So that's Dabur, one of Ambrish's top picks. Ambrish, just let me try and squeeze in one more question. We have seen this absolutely gravity-defying rally in railway stocks, and almost every one of them, whether it's an RVNL or IRFC. Yes, one does keep hearing of a lot of the incremental order flows, especially for a company like RVNL. But how convinced are you, given the very sharp up move in prices? Do you like anything?
In fact, I was quite bullish on the railway stocks in the last couple of months. But then after the sort of a move which we have seen in most of them, at the current levels, I think they are more or less fully priced. I mean, they've got extremely good orders. Most of them have got good orders across. But I think execution needs to be seen now, because they have never executed orders like this in the past. So I think that's something which has to be seen. If you're talking of the next 5-6 years, I think it's a great space to be in. But if you're talking of the next 6 months to 9 months, I think the move is already done. It could possibly rest here for a while, possibly correct to a certain extent. So that should give a buying opportunity. But from a fundamental angle, I would surely look at the execution, over the next at least 2 or 3 quarters, because that could be a risk.
Okay, got that. Ambrish, we'll leave it there. Thank you very much for your time. Quick conversation, but good getting those thoughts. By the way, I have to say it's a huge day once again for mid caps and small caps, and I think the indices don't do justice, because I'm just looking at the number of stocks with huge volumes which have gone up significantly, and it's a long list. So don't let that nifty 5-point change fool you. The bank nifty did well today. That's a 0.5% gain, so it's better, much better than what the nifty did. But I would say even the bank nifty is not the story. The story is what happened in the broader markets once again, which continues to do very well. Small cap index 0.5%, mid cap index did was a little worse off in trade. I'll leave the mid caps too, Surabhi. Let me just quickly wrap up what happened in the large cap space. So Adani Enterprises was the top gainer. It's followed by Asian Paints and Lever. Actually, there are 4 2% plus gainers. Adani Ports is the other one which did well. So 2 Adani names in the top 4. On the downside, L&T, Dr. Reddy's were the two top, by far the top 2 losers. And then it was followed by Hindalco and Divi's Laboratories, which were down about 3% each. Surabhi.
Okay, so that's the large cap picture. On the mid cap side, well, the index itself has got about a 0.25% increase going for it, with the advance decline ratio largely positive. So some of the movers and shakers include a Vodafone Idea, which has managed about a 5% up move. Of course, it's only 30 paise we're talking about on a 7 rupee stock. But that is, what we can spot. Adani Enterprises are ending with a gain of almost 5%. Day's high pretty much over there. Remember, Indiabulls Real Estate was beaten down quite badly on some unfavorable outcomes at the NCLT in Chandigarh. Today, there's a recovery on the stock, about 5% higher. Then the railways that we were discussing, Ircon and RVNL, all these stocks are up. Delta Corp saw some buying as well. So those are the names with the reasonable price and volume action. In terms of result reactions, Gujarat Gas really stood out, 5.5% up over there. Ratnamani Metals, 6% higher. And CEAT has seen some fantastic follow-through buying today, 5 to 6% up on CEAT. Just Dial, another mid-cap name that managed to do pretty well for itself today. So that's pretty much how it's going out. No really big howlers on the way down. In any case, Gujarat Consumers results were well received. Asian Paints was good on the FMCG side. The howlers really were in the large cap space, and that is Dr. Reddy's as well as L&T. So we end the day with another sort of indecisive kind of a session. The Nifty absolutely flat, 8 points lower, which makes it, well, we're still waiting for follow through. We just had that one big move on Monday, but no follow through after that. So it's kind of, after that, it's just gotten pretty quiet.
A little quiet, and we got one more day into the weekend. And over the weekend, we of course get the election results. But broader markets, as I said, no problem. Lots of movers with volumes as well. Well, it's a wrap on this edition of Closing Bell from Surabhi, me and the entire team. Thanks very much for staying with us. Don't go anywhere, though. The focus on market continues. Our market special, Markets Today, on the other side.